struggling with prop firms? Let's go. Hey guys, welcome to the channel. Today I'm going to be speaking about the importance of adding confluences and which ones you can basically add to increase your win rate and why it's so important, right? Super important. Now this is basically the difference between your C+ setups, A+ setups, B+ setups, whatever you want to call it, right? And we're going to take a deep dive into this. I'm going to be using gold for the example. Now obviously for those if you've been trading and struggling with trading for a long time, you can also link will be in the video description. You know, you can join the community where obviously we're to 1239 members, you know, where I post my winning trades, losing trades, the other students do as well. So this is basically where I offer my one-to-one mentorship if anyone's still struggling with trading. And also what I made super simple for everyone as well. You know, if you don't want to, you're not interested in joining the one-to-one mentorship, this is the elites basically over here, but I'm just gonna quickly go over this. I made a super cheap affordable course for everyone with my exact trading strategy that made me 700k prop firm funded. Yes, it's all here, exactly how I draw my spawn resistance zones, my exact entry method, everything. It's all here. Trading roadmap, psychology videos, everything just for 99 pounds. So link will be in the video description for that. Yeah, so join the community. Yeah, so okay, quickly coming back to here. Okay, so basically now what do we look for, right? Why is it so important to add the confluences? So let's just see what AI says when you put it on Google, right? It's confluence is important because it increases the reliability of a trading setup. Now the way I look at it, right, is, I mean, I've given this example before in my Discord community, but I'll just give it right now as well. Let's look at let's look at the animal kingdom, right? What confluences does a tiger, for example, use before he captures or catches his prey? He doesn't just run towards the its prey. He hides in the grass, right? Uses camouflage. A crocodile, alligator, uses a lake, a river, whatever you want to call it, uses water. Now the deeper the better when he's sneaking up upon the wildebeest, right? Now why is this so important? Now why, just the way the tiger uses grass to use camouflage, he increases the probability of success to catch his prey, just the way a alligator does. We are using confluences to increase the probability of success for our trading, right? Now what basically confluences, now there's so many, but I want to give you some of the examples we can use. One you can use is trend. Now try this, right? Now try this. Whenever you see a trending trading instrument currency pair, and this is exactly what I have applied to my trading system, obviously I'm going over different ones. So example, you apply trend, right? The trend I like to give the example of is basically a river, right? Imagine a river and the direction that is flowing, obviously, you can't have a river that's flowing upwards, for example, the way a bullish trend is. But I'm going to give you an example, right? Bearish trend, bullish trend. If I was to throw a football, something that, would stay afloat into a river, it would, without any effort, it would flow in that direction. Now volume, another confluence you can, pretty much add as well, is the speed of the current of the river. It's the speed that the ball will automatically, again, without any effort, will start flowing in that direction, which is insane, right? How much little effort is basically what you wanna. So what I'm trying to say is, let's pick the bullish trend over here, right? You can hear probably the sirens in the background. They're coming probably for me, just giving out this valuable information. Okay, so we got this bullish trend here, right? Now this is obviously pure volume here. So the market is moving sideways, but there are trends within trends, just the way there are zones within zones. So we've got this mini trend, overall if we went to the bigger time frame, we'll have a much probably bigger time trend. So let's just call this, we got a mini bullish trend, right? Because the bullish trend here, if I was to throw a football, in this case a trade, pretty much with a large enough stop loss, I would eventually win the bullish buy trade. Now just in this case, if I had a trade here with no stop loss, what do you think would happen, right? I would win the trade. Now the reason why we have to have the correct zones in place, so we can adjust our stop loss correctly. That's the way you got to look at these zones. The reason we have a buy trade, because the trend is bullish. You would look at volume, the speed at the price would move, the speed of the current Example, look at this bullish candle here. Volume. Why? Look at the size of these candles compared to the previous ones. Pure, volume here, right? Now you look at this. I mean, so many different conflicts. You can see the quality of the breakout. You can see the quality of, what candlestick patterns are you basically using for entries. So let's just go into this example over here, right? So what I'll do is I'll put this on playback. So we see a price. Okay, now price over here, just in my eyes, is just moving sideways. We do have these trends, bullish trend over here. Oh, just one moment. What have we just done there? Let's draw this one over here. We've got a bullish trend. We've got like a why? Because price is making, well, see, this is just when we have that shift. But let's see here, higher highs, higher lows, higher highs. It just goes on and on, vice versa. Again here. Now the way I would look at this, right, sometimes if you're not too sure about your trend lines, or with the how knowing if a market's trending or not, just do a bit more research on this on Google, or watch more YouTube videos, the way you can spot these. But let's look at this. Now this is not obviously trend line breakout strategy, right? And you can see this here, clean trend here, breakout, price comes up and touches this retest, this trend line, and then it just falls from there. This is not how we are trading. This is not the break and retest I'm showing. By the way, my break and retest is not this here, right? I've refined this over the years. Mine is totally different and unique. I use zones. Obviously I use key levels, what I heavily focus on, but my zones are usually super accurate. If I even show you some of one of the trades, I mean, it was a break-even trade, but let's just go over through some of them. I just click on these winning trades. I mean, some of these here, okay, you can see this, key levels, which are basically supply and demand levels, small resistance levels. So it just goes on and on, and some of the students posting there as well, but it just goes on and on. Now my point that I'm trying to say is, it doesn't matter how you look at the zones, as long as you got zones to work from, and they're good quality zones as well. So let's go through this one, right? So let's go to a small time frame now. Okay, so we've got resistance formed here, we've got support formed here, price breaks through, right? Price never comes down here, so I've got no interest. Now price breaks through this zone as well. So, and I've already sent videos of how to draw these zones, but now again, not the break and I don't want any confusion. Not this, I don't use this personally, and this is not the break and retest that I show to my students. So price breaks through, price comes down. Now where would I enter from in this case, right? Well, you can use Confluence as look at the quality of the breakout, look at the volume. We've got the volume, definitely. We've got the trend pretty much starting to shift to a bullish structure forming. So let's go to a small time frame. So now what do I look for? You can look for a engulfing pattern, which is exactly what we have over here, right? We've got a bullish engulfing. That's good enough reason for me to take the trade. You've got this bullish engulfing. Now this is a bit too early for my liking. You want support to be established once you get the breakout. We get these multiple wick rejections. We've got a bullish engulfing here, not the best quality, and still it's a bullish engulfing, but again not the best quality, not the way I like my bullish engulfings. Again, I don't use these engulfings as my entry signals, just to make that very clear as well. Super strong bullish engulfing candlestick pattern. You can pretty much take your entry from here, and this would give you a nice trade. What's what we got here? Right, almost 1 to 5. Let's just keep it realistic. Let's just say 1 to 3, 1 to 4. Ideally what I like to go for as well, unless you're starting to trail. Now if you want to trail the stop loss, how would you do that, right? Okay, so we got these, you entered this trade here, price has shifted up here. You can obviously have this structure zone here pretty much, and now you can move your stop loss from, so once it comes up, it comes back down, and then move your stop loss to your trailing stop loss. And let's just say, okay, what could be the extra confluence that it won't just break, and well, look at this, we've got a morning star, dark cloud, the opposite of the dark cloud cover. Price continues pushing further up. How can you look this even further, do more, got to be basically like a surgeon, right? Dissecting smallest to the smallest details. Price comes, shoots, flies back up. You can have your stop loss below this zone now. When price keeps going, let's just say it comes up here, but we've already got the major zone, and we would have put this like this here. But price keeps going. But if you had your stop loss even down here, and that is basically what you're doing. I'm trying to get better and better day by day as well, and that's what you basically do. Just follow it, right? Super simple. Let's go to a now. Why I recommend trading the support resistance, you know, it's super simple strategies, guys. Super simple system. Now another thing I want to make very clear as well. When you're trading these trend lines, which I don't trade, by the way, that's not how I trade. I just want to make this clear. Don't think, okay, price, you know, I've got these free touches here, and now market's coming down, I'm going to do this, you know, and then I got my breakout take. No, this is not how you draw your trend lines. Just to make that clear, right? I've seen a lot of people make, you know, go wrong with this. I'm just throwing it out there. Obviously that's not how I trade. That's not how my students trade. I don't know why I just threw that out there. Okay, so let's look at another example. I want to look at a losing example. Let's just see which one we can pick. Another thing as well, guys, is price. Look at the way it's pushed all the way down, right? I mean, I can see a winner over here actually. I still want to go through a losing example, and okay, this would be a losing example over here actually. I'm going to be showing you over here, which is a no-brainer. We get the breakout, price comes down, obviously consolidation started afterwards, but let me just mark this as the loser. We can change the color to this. Okay, now why did this trade lose, right? And why did this one win? Well, first of all, you gotta look at, I like to keep things super simple. Remember, there was a bullish uptrend. Well, before that, there was a bearish one. Now there's a huge breakout to the downside, right? A lot of bearish volume. Now price got this huge bullish candle volume, and price has established its support. Remember one thing, whenever it establishes support, buyers are in control. Whenever it establishes resistance, sellers are in control. Now price breaks out here. We get this break over here, with a lot of volume over here. Now a bullish volume candle. So the way I would look at this is, if I was to even take this trade, right, I'd put a low risk on this, 0.5% or whatever, or even avoid this. Why? Because it's a tug of war now, right? A lot of sellers versus a decent amount of buyers. In a fight like that, you never know who's going to turn out to be the winner. Anything can happen, and that's why you get this losing trade. Now why does this one win? Because after this, why does, let me just put this back originally where it was. Why did this trade win, right? After this consolidation, the fight was already won, and who won? The buyers won. Whenever you see consolidation, just look at it as consolidation is just decision making time, or there's a bit of a riot that's broken out. Whichever direction the market is going to break out, just think of that gang, that team won the fight, won the war. You're right, that army won the war. Here the buyers won the war. So let's look at more consolidation examples actually. Look at this consolidation, bullish breakout. See, this is where zones are still being established, fresh zones, so we can't really say, oh, you know, but let me see if another example. Let's think of another consolidation example. Okay, you got consolidation basically here. Now why was this market still pushing to the downside? Well, you get this, you know, if you look at here, left shoulder, right shoulder, sorry, the head and right shoulder, indicating a bearish possible shift momentum, and exactly what happened. That's why price moves to the right side, sorry, the downside. But why, if this happened on a you know, when zones are already established, and what I'm trying to say is the reason is still continue pushing further up, because look at our overall trend, it's bullish, right? Let's look at this. We've got our bullish trend, we've got consolidation, the buyers win the fight, right? What happens? Let's grab this over here. Ooh. And that's why, you know, buyers just take control and start pushing the market further up again. That's exactly what just happens. So you just look at add different confluences. Yours could be different. It could be different. You want to add, you know, confluences that give you the best possible edge over the market. That's the way I like to look at it. You know, it could be psychological. You know, a confluence is just as it could be as little as just waiting for the best time for market to touch your exact entry price. Some of you people might just take early entries. I've been a victim to that myself, taking an early entry, and what happens? I lose the trade, hits my stop loss. I'll enter again, and at the right point, and then I'm just scratching my head thinking and kicking myself, why did I not enter when it really mattered, right? Or worst case scenario, sometimes you'll enter again and you lose that trade, and then it's just like, wow. And then it just you know, That's when you really get to test yourself and what kind of a person you actually are. If you can stop yourself from entering trades, you know, just added a trading quote, new channel. So here, trading doesn't just reveal your character, it also builds it if you stay in the game long enough. You know, it's a quote from Yvonne Bijanji. Apologies if I pronounced that wrong in any way, especially to the person if he's listening. But yeah, okay, I hope you found value from this. Just add Confluences, find yours. If you're adding Confluences, guys, you're just adding more edge. You find, you know, for your strategy, for your trading system, for your career. I hope you found, and yeah, if any of you are interested of, you know, joining the one-to-one mentorship from myself as well, no, this is not a sales pitch. If you don't want to join, by all means don't join, you know. Or if you want to, you know, yeah, we'll leave it as that. Take care, and I'm out.